of the biggest themes in the marketplace today is the shift towards clean, renewable energy. It's affecting investors directly or indirectly, as almost every industry is shifting its focus from traditional energy sources based on fossil fuels to renewables. Investors should keep a close watch on Sterling and Wilson Renewable Energy, as the business enjoys a strong footing in the market and stands to benefit from global focus towards reducing carbon emissions. Sterling and Wilson Renewable Energy is a global pure-play end-to-end renewable energy procurement and construction solutions provider with an impressive portfolio of 258 solar power projects with an aggregate capacity of 11.6 gigawatts. Sterling and Wilson is the largest solar EPC solutions provider by percent of gigawatt capacity installed. The business has presence in more than 25 countries across Asia, the Middle East, Africa, Europe, the Americas and Australia. The company was earlier part of the Shapoorji Pallonji Group at the time of its IPO in 2019. During the IPO, the erstwhile management had promised to repay 1,000 crores that they had taken as intercorporate loan from Sterling and Wilson. Within a few days post the IPO, the management revised the repayment schedule due to group-level liquidity crunch. Due to promoter issues and uncertainty over repayment of loans, investors lost faith in the company and consequently the stock price plunged heavily by more than 50% from its IPO price. However, the financial woes as well as governance issues are mostly behind, as the company now has been taken over by a new promoter. In October 21, Reliance New Energy, which is a subsidiary of RIL, announced the acquisition of 40% stake in the company. Reliance has taken over the management control of the company as the deal got completed in the last few weeks. Climate change concerns are provoking nations around the globe to alter their power sources. At present, carbon-based fossil fuels meet 70 to 80% of the world's energy needs. As global governments move to phase out fossil fuel energy production, unclean power will be replaced by renewables. Meanwhile, regulatory support to transition the world to a cleaner energy mix and reduce the global carbon footprint along with falling costs of clean energy are setting the stage for a clean energy revolution. China is the largest market for clean power globally. Its total renewable energy capacity exceeded 1,000 gigawatts in 2021, accounting for 43.5% of the country's total power generation capacity. India's installed renewable energy capacity has increased nearly twofold in the last 3 years. As of 31st of December 2021, the total installed capacity for renewable energy in India is over 150 gigawatts, of which majority comes from solar and wind. Government of India is aiming to reduce carbon intensity of the nation's economy by less than 45% by the end of the decade and expand India's renewable energy installed capacity to 500 gigawatts by 2030. To bolster the growth of the sector, the government has allowed 100% FDI under the automatic route for renewable energy generation and distribution projects. In the union budget, the government enhanced the funding under the PLI scheme for domestic solar cells and module manufacturing to 24,000 crores from the existing level of 4,500 crores to promote the development of renewable ecosystem within the country. One of the key business risks that Sterling and Wilson faces during project execution and completion is the clearing of pending receivables. As of December 21, receivables pending for over 12 months are pegged at over 400 crores. Of these, the related party receivables from SP Group of 168 crores are expected to be cleared by March 2022. Apart from that, around 120 crores is pending from Argentina and around 60 crores is pending from a matter under the NCLT. Sterling and Wilson's revenue growth has been quite decent in 9 months of FY22 on a favorable base of last year. However, gross margins have been hit by continued increase in prices of modules and commodities and surge in freight rates. Post the change of management, cleanup of books is underway as the accounting adjustments relating to settlement of liquidation damages on certain past and existing projects has resulted in a severe drop in operating margins. The unexecuted order book stands at 5,500 crores, which is nearly equal to its current top line. Going forward, the order book is anticipated to jump multifold as the takeover by Reliance will open up new business avenues on a global scale. Meanwhile, the stock has corrected more than 35% from its 52-week high in October 21 and is trading at a deep discount to RIL's acquisition price of 375 rupees per share. The current valuation, 16 times of FY24 estimated earnings, are very reasonable from a long-term perspective, and therefore investors should look to accumulate the stock as the business has strong execution capabilities and is uniquely positioned to benefit from the mega trend of clean energy.